Viva. Wonder where banks came from. It wasn't with Wall Street or guys in fancy suits. The story of banking is thousands of years old, and it starts not with money, but with something much more fundamental: trust. Let's travel back in time, way back, to uncover the surprising origins of how we manage our wealth. Our journey begins in ancient Mesopotamia, around 2000 BC. Imagine you're a farmer. You've just had a great harvest, more grain than you can store or eat. What do? You can't just leave it out to rot or be stolen. This is where the first banks come in. But they weren't buildings with vaults. They were temples and palaces. People trusted the priests and rulers. So, you'd take your extra grain or your livestock to the temple for safekeeping. In return, you'd get a clay tablet. Think of it as the world's first deposit slip with a record of what you stored. The temple was secure, guarded, and seen as a divine protector of your wealth. This system was built on a foundation of communal trust and religious authority. It was a safe place, and everyone knew it. But these early bankers were smart. They realized all this grain was just sitting there. They thought, what if we could put it to work? So, they started lending it out to other farmers who needed seed for planting, or to merchants heading out on long trade journeys. Of course, this wasn't free. When you paid back the loan, you had to add a little extra on interest payment, often paid in more grain. This is the birth of the interest-bearing loan, a concept that is the bedrock of modern banking. It wasn't just grain either. They dealt in cattle, tools, and precious metals like silver, fees. Temple banks became the economic hearts of their cities, facilitating trade and agriculture. They weren't just warehouses. They were active financial institutions, fueling the growth of entire civilizations. Now, let's hop over to ancient Egypt. The Egyptians had a similar system, but it was massive and centralized. The entire economy was essentially run by the pharaoh's treasury. They had a statewide network of granaries that acted as a banking system. Farmers would deposit their grain after the harvest, and the amount was recorded meticulously by scribes. These records were incredibly detailed. They would note the depositor, the amount, the date, and the quality of the grain. When it was time to pay taxes or trade, you didn't have to haul heavy bags of wheat around. You could simply issue a written order to the granary, like a modern check, transferring a portion of your grain balance to someone else's account. This was a sophisticated system of credit transfer, all without a single coin exchanging hands. It made commerce across the vast kingdom of Egypt much, much easier. Next, we journey to ancient Greece, the cradle of democracy and philosophy. The Greeks took the idea of banking out of the temples and into the marketplace. Private entrepreneurs, known as trapezitai, set up tables or trapeza in the agora, the city's public square. These were the first true private bankers. They did everything. They exchanged different city-states' currencies, which was crucial because every city minted its own coins. Took deposits, not just for safekeeping, but specifically for lending out at a profit. They became masters of risk assessment. Judging who was a trustworthy borrower and who wasn't, they even arranged loans for major public works and financed shipping ventures across the Mediterranean. The trapezitai were central to the vibrant Greek economy, and their tables were the nerve centers of commerce. Then came the mighty Roman Empire. The Romans, as they did with many things, took the Greek model and scaled it up to an unprecedented level. Roman bankers, called argentari, were even more sophisticated. Their operations were vast, with networks spanning the entire empire. They developed complex bookkeeping methods, using concepts like debits and credits. They could transfer funds between accounts in different cities with just a written order, creating a seamless financial network from Britain to Syria. Roman law also started to formalize banking practices, creating regulations around loans, interest rates, and disputes. If a banker failed, the law had procedures to deal with the fallout. For the first time, banking wasn't just a practice. It was becoming a regulated profession, an essential part of the machinery of a global empire. So what's the big secret of ancient banking? It's simple. It was all about solving real-world problems. How do I keep my stuff safe? How can I trade with someone far away? How can I fund a new venture? The answers to these questions, found thousands of years ago in temples, granaries, and marketplaces, laid the foundation for the entire global financial system we rely on today. From clay tablets in Mesopotamia to the complex ledgers of Rome, the core principles have remained surprisingly consistent: safekeeping, credit, and the transfer of value. 2. The technology has changed, but the fundamental human need for a trusted intermediary to manage our wealth has not. The next time you use your credit card or check your bank account online, remember the ancient farmers, priests, and merchants who started it all. Thanks so much for joining me on this journey through financial history. If you found this as fascinating as I do, please hit that like button and subscribe for more deep dives into the stories that shaped our world. Don't forget to ring the notification bell so you won't miss our next adventure. See you in the next video.